Funny enough, most times the owners of small business always assume they are not going to pay taxes to the Internal Revenue Services.
That's for the state now.
For the state.
Okay.
Now, I need to break it down. The simple understanding is that corporate entities pay to the Nigerian Revenue Service.
Okay.
Individuals pay to the state Internal Revenue Services. Except for
you bake cakes from your kitchen. You run a POS stand. You sell sneakers on Instagram. You are running a nano business, trying to survive. But every time you hear Internal Revenue Service, taxman, taxmaster, you panic because you imagine men in suits asking for complex accounting books you don't have, or handing you a tax bill larger than your actual profit. Because of this fear, millions of young Nigerians stay hidden, running their businesses in the shadows. But what if the law actually had a built-in shield specifically for small businesses? Welcome to Tax Gauge. I'm your host, Hannah Rain. Today we're talking about survival, side hustles, and presumptive taxation. Joining us in the studio today to break down how state-level revenue collection actually impacts the youths is none other than the Executive Director, Plateau State Internal Revenue Service, and a member of the Plateau State Economic Team, Dr. Jim Pam Wires. Welcome, sir.
Yeah, thank you. Thank you for having me around.
All right, so this is Tax Gauge. We'll go on a short break. When we'll be back, we'll dive right into the conversation. We are back, and this is Tax Gauge. We have with us here in the studio Dr. Jim Pam Wires, the Executive Chairman, Plateau State Internal Revenue Service. You're welcome once again, sir.
Yeah, thank you for having me.
All right, so going into the meat of the conversation, we're discussing presumptive taxation today.
That's right.
So looking at the new tax law and everything that has been designed for the presumptive tax.
That's right.
Before we go into breaking it down or how it is paid and all that, what is presumptive tax?
Okay, so thank you very much. Now, one of the things you need to understand about presumptive tax is that you presume because you don't know the exact amount or income of a particular taxpayer or group of certain level of taxpayers. Now, Nigeria is heavily on an informal sector, which is estimated at about 70% of the population are completely informal. And those sectors are those who that drive the nano businesses, micro businesses in our market spaces. They don't have a kind of formal arrangement, but they have some kind of arrangement they made, either in terms of their union, associations, or different kind of trades. They come together and have a kind of union. Now, if you are going to carry on the presumptive tax from the tax administrative background, you are going to say, okay, these people within these ones that sell this kind of businesses, how can we tax them? So we just estimate that, okay, this will make roughly an estimate of certain level of amount. They will say, okay, we benchmark them on that amount. If that happens, you are doing what we call a presumptive tax regime. You're operating them under a presumptive tax regime. But however, in Nigeria, those that are always within the presumptive tax regime for a very long time have been left there. Because the idea is that you shouldn't be under the presumptive tax for too long. Because ideally, you're supposed to transit into a formal taxpayer after a while. So let me give you an instance. All of you are a group of individuals that sells, let's say, spare parts. Now, it means that it must get to a time that few individuals will metamorphose from those little sales of spare parts to a warehouse.
Yeah.
So when you transit to a warehouse, you shouldn't have been under the presumptive tax regime. You should have moved into a formal taxpayer where we now assess your income. Now, the idea about taxation nowadays, or in Nigeria now, is based on income.
Exactly.
So it's not based on, it's not based on maybe you assumed, or in another palace in the tax administration, they call it based on judgment. Now, just looked at you and I said, oh, you earned this amount, then I would That was what we call best of judgment.
Yeah.
And the presumptive tax is also connotes on that kind of arrangement that I looked at a certain group of individuals, then the best judgment fit them and say that, okay, all of them should pay this amount of levy or this amount of taxes as their income tax, as it were.
Okay, so that's what
Presumptive tax in a nutshell means.
Okay, so considering our target audience, who is majority made up of young people.
That's right.
So for a student now, for instance, who is a baker, who earns money by baking birthday cakes for her colleagues and friends, and still collects stipends from his or her parents.
That's right.
But still bakes cake. What is presumptive tax to this kind of person?
Great. So now you see, for a student who is schooling and probably doing some kind of nano business.
Yeah.
Now the idea of the new tax regime that was passed last year is now to remove those people from the tax net, because their income is just for survival. Okay. Now, what do I mean by survival? You know, taxation does not only just tax income; it matches both your income and your expenditure. If your expenditure does not give a reasonable profit, then you ideally are supposed to be exempted from the tax net. And that's what the new tax law tried to achieve. Now, not necessarily that it's trying to push presumptive tax out of the way. Yes, there could be presumptive tax based on certain arrangement on certain activities that connotes in the system. But for a baker who is a student and at the same time a taxpayer, so the little understanding that will make them to understand is this, so that I can break it a little bit simple, is that you should ideally submit your returns.
Okay.
Now, you tell the tax authority that I earn this amount, but I spend the amount in the same business, and what I literally live with was something to take home. And if my take home is not necessary or reasonable to be taxed, then we'll exempt it from tax payment. Okay. And again, you know, now there's a threshold even for businesses. Yeah, so there's a threshold for businesses. Now the new tax law says that although there's a conflict, but they've cleared the conflict. Now, before now, it was 25 million for business or small businesses that have a turnover less than 25 million. Then again, now they say that it's 100 million. But at 100 million, they also have a cap that says that even if your business goes above 100 million or below 100 million, but you have a fixed asset of up to 250 million, you're no more a small business.
Yeah.
So they're trying to look at a small business is a business that have a capital. Let's take, for instance, this studio here, that will check either all your assets and your equipment are up to 250 million. And you have a turnover of 100 million, it means you're still a small business. You will not be taxed company income tax. Okay. But that is for the Nigerian Revenue Service, the deformed FRS. Yes. But funny enough, you know, most times the owners of small business always assume they are not going to pay taxes to the Internal Revenue Services.
That's for the state now.
For the state. Okay. Now, I need to break it down. The simple understanding is that corporate entities pay to the Nigerian Revenue Service. Okay. Individuals pay to the state Internal Revenue Services. Except for individuals that are what we call international workers, foreign missions, somebody who comes to Nigeria to do business and goes out. Okay. Now, that kind of person is taxed under the Federal Nigerian Revenue Service because he's not resided in a country for a particular period of time. Okay. Now, the law says that if you reside in a particular state for up to 180 days, I mean, that is your tax jurisdiction for that year.
Exactly.
I hope I'm not speaking too many grammar anyway.
No, this is tax gauge. So we're
all right. All right.
We're breaking it down.
Yeah. So for that kind of student or so many other kind of nano businesses, okay, all the tax authority expects from you is that write to us and tell us that, okay, yes, I have income, but the income is deferred by the expenditure I used to. For example, a baker may have a turnover of, let's say, 20,000, 30,000 a month, right? Okay. But the cost of the flour, the cost of the sugar, costs. Yes, the cost of even raw materials, talk more of other costs, incidental costs that you attach to it, might give him about 20-something thousand. You would discover this profit margin is about 8,000. And that 8,000 might likely be his take-home pay. So would we tax the 8,000? If he shows that that is also his own salary, and the salary fall under the threshold of the minimum wage, then we say that no, so you don't need to pay tax on it. Okay. But again, that is when non-presumptive tax come in. So we look at those group of people that make little income and say that no, instead, because taxation is contributory, you're supposed to contribute, every individual is supposed to participate in it. Okay. So we tell you that, okay, we are putting all of you per annum at a flat rate of 10,000. You can decide to how you pay it. Oh. And if that happened, you're under what we call presumptive tax regime.
Okay, so Doctor, thank you so much for this. I love the way you really broke it down, and I trust that our audience, they are really picking a lot. But I want to take it home. You are the executive chairman of the Plateau State Internal Revenue Service. You are the helm of affairs, leading the conversation when it comes to new tax laws in the state.
That's right.
So, and I know you're doing a lot about presumptive tax and the domestication of the law. Fantastic, great job. We see everything that you're doing. So, but now I really want our audience to know, practically, what is the Plateau State Internal Revenue Service? What is your office doing? What are you doing in your region to ensure that presumptive tax is adopted according to these new tax laws in the context of everything you've said?
Yeah.
What are you doing practically to ensure that, okay, this presumptive tax is done according to the new tax laws?
Okay, so thank you very much. So let me break it a little bit down from the top to the center. Now, one thing about taxation is on the exclusive list. Now, exclusive, yeah, what I mean by exclusive is legislated at the center, at the National Assembly.
Okay, yeah.
So the states don't have the power to legislate on taxation.
Okay.
It's not on the concurrent list. So concurrent list is on the subnational, is over the subnational level. What the state has is that they have the power to domesticate what they have legislated at the center.
So you're saying now that the NTA was designed at the center?
That it have been time immemorial since Nigeria have been established. The taxation are on the exclusive list, and the reason is that so that we won't have different states coming out with different laws that contravene what is happening in the center.
Okay.
If you remember, there's a time that the FRS then had issue with Lagos, but Lagos introduced what they call consumption tax.
Okay.
And they say consumption tax is the same thing like value-added tax.
Yeah.
And remember, value-added tax is based on consumption.
Exactly.
So it's like double taxation.
Double taxation, yeah.
So in order to break the issue of double taxation and multiple taxation, as the case may be, the issue of taxation is legislated at the exclusive list, which is at the federal or at the center. And that's why the the four collection of bundle of the laws in taxations that we have in the country now, all of them are at the center. Now, it depends on all the 36 states, including the FCT, to domesticate.
Okay.
So what we mean by domesticate is that you accept it that is your own law in your state that you operate with it. And that's a simple definition of domestication. Now, so the FRS corrects corporate taxes, like I said earlier, while the states collect the individual taxes. Then again, of course, for all jurisdiction, for the first time, even the law allows us that what I'm doing in Jos or in Plateau State is the same thing in Kaduna, same thing in Lagos, same thing in Enugu, same thing in Bayelsa, same thing in Rivers. So all the states have the same processes. And that is why there's what called NTAA, the Nigerian Tax Administrative Act. Yeah. Right? So the Nigerian Tax Act, for the first time, consolidate all our laws and put them into one document. Okay. But for the first time, we don't have fragmented pieces of laws. Yes, all of them. So all of them are in one book. And so that makes it much more easier that this time around I can pick this book and go through it. And it's the same thing for the person in Lagos, same thing for the person across the subnationals, as it were. And now coming back to what we're doing in the state.
Exactly.
Now, for us in Plateau State, we discovered that the only way we can achieve this presumptive and not to overburden to the poor, because the idea is that the tax law says that we shouldn't tax poverty.
Yeah, don't tax the fruit.
Yeah, so don't tax the you tax the fruit, don't tax the seed. Yeah. So the idea is, so we're trying to see how we move our taxpayers into the tax net, but in a more logical way. So we come to them through their associations, through their union, through their whatever they have different kind of until when you are, in fact, sometimes you see that, like, for a very good example is Market. Yes. Okay, Market. Okay. Yes. Market Traders Association. Okay. Now, so they have a lot of them. You could have union of transport workers. You have union of teachers. There are so many of them in the informal sector. So we bring them. They know themselves. They know their members. Yeah. I would say that, okay, that not all fingers are equal.
Exactly.
But the irony is that if you are dealing with them, that's my experience in Jos, if you are coming with them as a union, that even the high and the low want to pay the same amount. They want the benchmark amount. And taxation is based on your income. So on that one, they wanted a flat rate. So because we are now operating a presumptive tax, we say, okay, yes, since we are dealing with you as a union, come like that as a union. But if we have any information available to us that some of you earn certain income above the other, there's no rule The rule says that you can give what we call additional assessment.
Exactly.
So we can assess you more. So I'll give you instance. There's this Petroleum Marketers Association that comes to me and said, they want to have the independent petroleum, and that's their name, independent petroleum marketers.
Okay.
They said they want to have the same amount. But funny enough, one person have 5 filling stations and one person have only 1. Yet, for instance, all of them say, I will pay 25,000 per annum.
Okay.
So now the question is this. So, are you fair to the person that have 1?
Yeah.
And are you favoring the person that have 3?
Exactly. That's the real question.
So now what we do with them, we allow them to go like that.
Oh.
Then later on we say that we've assessed only 1 of your filling station. But we realize that you have 2. Can you report to us on the remaining 2? You see, they will come back in. But they said this like I said, no, sir. If this man have only 1 and you have 3, why couldn't you have? And again, you discover that the ones that are complaining are the ones that have the most sales.
Yeah.
Then later on we say, sir, based on our financial information, you even earn more. So you are supposed not to be under the presumptive tax.
That's what I'm supposed to say. So I want to ask, what are independent marketers, petrol marketers doing under presumptive?
The informal sector. If people want to remain in the informal sector, they don't want to go out of the informal. And the problem is that it's regulation. That they felt if I move from a presumptive tax to a formal sector, there are too many rules that will be disturbing you.
Okay.
So they are scared of the rules. So for that reasons, all of them try to remain there. And let me tell you the truth. We find out that there are some people that are making over 200 to 300 million in the informal sector. So the good news is that I don't chase them when they come under the presumptive tax. I allow them come into the tax net. Then what we do again is that we use our data mining machinery and mine data on them. So now, so that we can go to independently, even if we, in code, we issue tax clearance certificate, that doesn't mean it's sacrosanct. That we can still come back and also do an additional assessment and issue a new tax clearance on the new assessment. So these are some of the things. But the truth is, the informal sector is still so wide, the gap is so widened that every day we try to bring them into the formal system. And one of the things we're doing in JOS is that we try by all means, we just register them. Let them have a tax identification number first. Let them have the first point of registration. Once you have the first point of registration, we keep building on. Because the first point of taxation is registering. And also, if you are registering with a true identity, well, we also have issues of taxpayers coming to issue with the wrong identity. So I give you instance. That's why sometimes we tell them that most times, in fact, now it's a benchmark that if you are coming, you must come with your name. If you are a corporate individual, if you are a corporate entity, you come with your business name. Or for those ones that have company, they are paying on behalf of the company, they come with their certificate of incorporation and with your RC number. Now, this is because we want to know the true identity of our taxpayers. So they are also, by and large, so I think a lot of things around them, and we always have meetings with them. Sometimes we'll have meeting, we end up with a quarrel or a fight where we still reconvey and still continue discussion the other day. Because the idea is that I keep telling them, it is the constitution that made it mandatory for you as an individual to pay your taxes. And that is your first responsibility to the state or to the country. Now, any person that try to reduce or not to pay his taxes, he's not responsible to his country. He's not a true citizen of a particular country as he were.
We heard it right here on Tax Cage. Dr. Jim Pamwire, the executive chairman of Plateau State Internal Revenue Service, has said it. If you do not pay your tax, you're not a true citizen of your country. We've been having a very interesting conversation with Dr. Jim, and we'll go on a short break right now. When we return, we'll dive more into presumptive taxation and how it is actually done. We'll be right back. Welcome back. This is Tax Gauge, and I remain your host, Hallel Rain. We've been having a very beautiful conversation with Dr. Jim Pamwire of the Plateau State Internal Revenue Service. He is the executive chairman and also a member of the state economic team. Thank you so much, Doctor.
Yeah, thank you, Hallel.
So we're going to continue right now. And what I really want to start with is a very practical question people always ask.
Okay.
And this question is, should they wait for presumptive tax, an assessment to be done for them or should they come to the service and file?
Okay, so, so this answer in very simple language, no. The
Okay.
ideal thing is that we're operating what we call self-assessment.
Beautiful.
And the self-assessment is that you assess yourself, you submit to the Internal Revenue Service, and the Internal Revenue Service will review your assessment. Until when we have issue with your assessment, then we'll raise objection or we'll raise an additional assessment or whatever kind of paraphernalia we have to do, then we'll do it. So, but you see, in the informal sector will never come to the tax authority. And the reason is that, so because they are not coming, we'll chase after them.
But the whole essence of what we are doing currently is to build sensitization. So we are hoping.
I'm glad because it's under what we call voluntary compliance.
Exactly.
You must comply voluntarily without anybody coercing you to do it.
Okay.
And that's the regime we are here in Nigeria. But unfortunately, none of them come. But let me give kudos to some of the taxpayers. Exactly. They willingly come and tell you that, okay, I've earned this income. What am I supposed to pay? Some will tell that I've earned this income, the law said I should pay this amount. Sometimes we correct them and say, no, you're overpaying because they, even withholding tax on what you are talking about, have been reduced from 5% to 2%, for instance, or from 10% to 5%. So you are supposed to pay withholding tax. At the end of the year, we'll check all your activities, both your income and your expenditure. Then we give you an assessment on what you should pay. And those withholding tax will relieve some of the tax burden you have on your payee or whatever you've paid. So these are some of the things. But the good thing is that for the first time, the country is moving towards synchronizing the withholding tax payment. And the withholding tax payment now is making it much more easier for us to bring a lot of people into the tax net. Let me give you an instance. Most of the banks have their financial year and they declare a lot of dividends. We could now literally see withholding tax on dividend coming in. So we know somebody somewhere have earned income. So we are going to go after him and say that, okay, we've seen this income like this. So, and it will surprise you that those guys in the informal sector are investing heavily in big companies. And sometimes we'll come and say, you have, okay, like for instance, you have an issue or somebody from the informal sector want to come and issue because the land documents say that before they give you CO4 or RO4, you must have a tax grant certificate. So the person will come to you as a tax authority that I want to have a tax grant certificate, that my presumptive tax payment is 25,000 per month, per annum. And I want you to give me a tax grant for 25,000. And you asked him, okay, how much did you buy the land? Say he bought the land 10 million. You see, so there is a gap there. So you start looking at the figure. Say, okay, but you paid only 25, meaning that if you pay 25, let's assume it's even 10% of your income. When we're talking about maybe probably you earned like 2.5 million. Yet in that financial year, you're purchasing an asset of 10 million.
So what if it's money that has been saved over the years?
Good. If that has been saved over the years, then we'll now do back duty assessment because the law allows us to go back and check 5 years now with the new tax law. Before now it's 6 years. So now it's 5 years. We'll go backward and do what we call back duty assessment. We'll assess you. Yes, we agree you've been paying 25 maybe for the past 5 years. But now we looked at it. It means that there are some years that you have been underpaying the Internal Revenue Service. So if that happened, we give you a reverse assessment.
Okay. So how does the reverse work now?
Now, so the reverse assessment says that I looked at your activities, I looked at your financials, then I give you probably now with the aid of technology. So we have what we call different applications that do data harvest via your BVN and your NIN and your bank account. So when we have a BVN, it gives us all your bank statements. So we will harvest the data.
Okay.
Then also, I want you to also remember that the new tax law allows the bank on financial institutions, not necessarily the banks, even insurance and the rest, that at every quarter, if anybody has a turnover of 25 million, they send the report to us.
Oh,
yes,
so you don't need to request?
No, not on demand. But the law says that not upon demand. That once you have any customer that has a turnover of up to 25 million in a quarter, means in 3 months, he has up to 25 million. You send it to the Internal Revenue Service. You report to them. So we also go and check all those reports.
So sorry, let me just ask. Since January this year, since when the new law took effect, have financial institutions been obliging and doing this?
For the banks, yes. But for the other financial institutions, we've not been seeing it. So I'll give you an instance, like we have the money market, capital markets. We've not been seeing things from them. So, but then, it's our duty to also remind them that there are fines for them of non-disclosure.
According to the new tax law?
Yes. If you don't disclose, there are fines for them. So there are a lot. So, but anyway, let me not scare the younger guys that.
No. This is for the companies now. This is for the financial institutions. So they have
Yes.
fines for not
There are
sending these
fines
things.
for not sending the reports.
Interesting. So you're on a flow of thought earlier.
All right. So yeah. So now you see. So we'll now check your records.
Okay.
Check the financial, do data harvest, and check your BVN. Check the transaction you had over the years.
Okay.
If we discover that the 25,000 you've been paying us is far less than what you are supposed to pay, we'll raise an assessment based on what we have. But you have right to object.
Okay.
That say, yes, this assessment you might write, this is my turnover, but I have more expenditure in this, and this. And the tax authority also will consider your, and they can give you another reverse assessment now.
Okay.
Instead of, I said I talk about additional assessment.
Yeah.
Now we give what we call a revised assessment. So the revised assessment will state and capture what you claim. Then again, if you disagree, we also give you another one. If you disagree, then there's what we call the Office of the Tax Ombudsman, or there's what we call the Tax Appeal Tribunal. Then probably we'll go into that. If we go into the Tax Appeal Tribunal, then it means that we're going to court to go and settle our problem. But if we go to the Tax Ombudsman, we get a mediator that will look at us and look at us from different sides and talk about it. Of course, these are new offices. This had been in America for years. America have been having the Tax Ombudsman, and it'll help to mediate problems between the taxpayer and the tax administration.
All right, so before we draw the curtain for presumptive tax, I just want to ask this one final question. Now, taking us back to that student I drew attention to earlier. Now, this student has heard what you said now and knows that, okay, I'm meant to file my tax, but doesn't file. And then 3, 4, 5 years down the line, and he comes into the tax net. What happens? Would you, for now, you in your office, are you just going to start taxing that person from now, or you're going to backdate? How does it operate? How does that work?
Okay, so let me explain what the new tax law brought into force again.
Okay.
Now, before now, annual return is filed by the employers.
That's for pay.
Irrespective, we call it annual returns. That on organizations, for instance, Prime Gauge, now will file for all of you. That I have this number of staffs, and in the previous year or last year, they had this kind of salary, and this is their taxes.
Okay.
But the new law says that aside the corporate filing, whose deadline is 31st of March every year, the individual have 31st of January every year for corporate. Then for individual has 31st of March every year that they should file. Though ideally, as you are now, you are supposed to must have filed some 2 or 3 months ago your returns, your own personal returns. Now, aside the ones the company does. The reason is that you might have what we call incidental income.
Okay.
So let me explain. Maybe you have a farm and you sell your farm produce, you earn income from there.
Yeah.
So it's just an incidental income. Or you have an investment in, let's say, Standard Bank, for instance, not to advertise any bank. Let's say to any bank, for instance, and the bank now pay you dividend. That's also an incidental income.
Okay.
So ideally, you're supposed to disclose that income. Okay. Now, if you come as an individual, 5 years down the road from today, let's say, for instance, 5 years from now, maybe in 2030, you come and tell us that you have never filed in for tax, now you are in the tax net. What the tax authority will do is that, yes, of course, we'll tax you of the current year. But if the law tells you that you are supposed to be filing since and you refuse to file, there's also offense for not filing, and there's also offense for late return filing. And it compounded over the months.
Interesting. So
ideally, we are going to compound all those months. So, in 5 years, you know how many months we have.
That's 12 times 5.
Yeah, that's about 60 months. Yes. So we're talking about 60 months. So you compounded for 60 months.
And the penalty is 100,000 for the first month.
Yes, 50 goes. You understand? You can imagine how much we are going to collect for you instead of you to file a nil return. But the law allows you to file a nil return that I did not make a profit, or rather, I did not even make a sale. Because there are companies today that a month will come and go, no sales.
No sale, yeah.
You understand? So the law allows you to file in what we call a nil return.
Nil return.
There was no income in terms of my return. No, so if that happened, we looked at it. But the good thing is that the laws are not cast in stone.
Okay.
And the tax authority have human face too.
Oh, okay.
You understand? So sometimes, like what I do with my taxpayers, I tell them that, yes, you've not been paying this and this. I'll give you instance. I have a company, they call it just JED, just Electronic Distribution Company.
Okay. Yeah.
Now, we establish a liability with them. Liability is so huge They said they have liquidity problem, that they cannot survive the next day if we take away everything. So we tell them, okay, pay in piecemeal. Yes, we know that you have liquidity problem, but you also want it to survive so that we too can earn your income from it.
In the future.
So yes, so we allow you to be surviving while you be giving us in piecemeal. So our taxation allow also piecemeal payment. So for that kind of individual, we looked at their case. If it is genuine, we also advise you to, okay, pay in piecemeal. If you can't pay in piecemeal and we discover that you're incapable or you're incapacitated, then the law allows us also to give waiver. For the states, the governors have the ultimate power to give a tax waiver for any company or any individual, as the case may be. So if that happens, we can give you a tax waiver.
Interesting.
Yeah.
Thank you so much, Doctor. All right. So so what this means summarily is this: that young individual who is a student, if he doesn't do what he's meant to do right now, in the next 4 to 5 years or 3 to 5 years,
It will
when
catch up
he
with him.
decides to come in, it's going to catch up with him.
That's right.
So you're headed right here on tax cage. You're a young individual, you're earning an income, go and enter the tax net immediately, especially if you're in Plateau State. If you're in Plateau State, you need to enter the tax net immediately because you're risking yourself if you don't do that right away. Well, this is Tax Cage, by having a very interesting conversation right here with Dr. Jim Pam Wires of Plateau State Internal Revenue Service. So you've headed right here on Tax Gauge. Staying in the shadows might actually be costing you more than stepping into the light. Presumptive tax is not a trap. It's a shield designed specifically for your side hustle. This conversation is far from over. So to our viewers, when we return, we're going to be discussing the domestication of the new tax law. This is Tax Gauge. Do well to like, subscribe, and follow on all our social media platforms as shown on your screen. I remain your host, Hello Ray. When the federal government passes a massive economic policy like the new Nigerian Tax Act, it often sounds like a Abuja grammar to a young entrepreneur in Jos. But there is a crucial legal process that has to happen before those federal promises actually mean anything to your business on the ground. It is called domestication. What does domestication of this new tax act actually mean to you in your state? Is it going to unlock the tax reliefs and shields you've been promised? Or is it just going to give the local tax offices a new roadmap to track your money? Welcome to Tax Gauge. I remain your host, Hello Rain. And today, we are focusing on how these big federal laws are being brought down to our local streets. We are breaking down what domestication means for Plateau State and how it will impact your daily survival. And to discuss this with us, here in the studio is the executive chairman of the Plateau Internal Revenue Service and a member of the state economic team, Dr. Jim Pam Wires. You're welcome, sir.
Thank you very much, Heather.
All right, so we'll go on a short break, and when we return, we'll dive right into the conversation. Welcome back. This is Tax Gauge, and we're going right into the conversation right now. Now we're going to be talking about domestication of the new tax laws. Okay. So 2025, the new tax laws were approved and they were passed into law, and then 2026, January 1st, it was domesticated and approved for use all around Nigeria.
That's right.
So what I want to know now is, what has Plateau State done in domesticating this law for Plateau State?
Okay, so thank you very much. Now, I think we had a bit talk about around the new tax law.
Yeah.
So one of the things the new tax law did is that it reduced what we call the noisy taxes that we have around. And from the center, we could see there's a lot of consolidation. That's, if I mean center, I mean the federal government.
Yeah.
So the federal government, there's a lot of consolidation of a lot of taxes, like the education tax, the NIP dev, NEL fund, which is also new. So many of them were consolidated into development levy at 4%, so that it will become easy for you to collect, unlike what it was happening before. Then, so the laws came with package of other two laws. I think the two of those laws affected us more from the state. That's the NTA, that's the Nigerian Tax Act, and the NTAA, the Nigerian Tax Administrative Act. These are the two things that have affected us. The other two, the JRB and the NRS, are for the establishment, or rather we call them the establishment laws or establishment acts. They establish the Nigerian Revenue Service and also establish the Joint Revenue Board, as it were. So for us, one of the things that we see is that the laws were there, we're not far from what we have. But again, there's a huge diversion, because the bulk of our taxes that we collect from the state are what we call pay as you earn, that's the payee on individuals. You know, a new table was completely formed, and a new activity. And one of the things about the law is the fact that this time around, it removed a lot of even corporate taxpayers out of the tax net because of threshold. And the threshold goes up. And if you remember, the law in Nigeria, based on Nigerian labor law, that the minimum wage is not taxable if you're in a corporate environment. Meaning that if you earn, before now it was 30,000, and that's why at 300,000 per annum is at zero rate. But today we have an increase in our minimum wage to 70,000. So the first 800 is at zero rate. It means it's tax free. Then again, they also brought what we call a cap for rent relief allowance. Now, this rent relief allowance says that 20% of your annual rent is exempted, but at the maximum of 500,000. Let's say you are paying a rent of, let's say, 2.5 million per annum. It means that 20% of 2.5 million is supposed to be your maximum cap. So at 2.5 million, probably that 500 is the cap. But if you are doing like 3 million, then it means that it's not a cap. So it's only 500. That 500 that is rent. So if you observed, if you add zero rate of 800 plus another 500 on rent, you're already at 1.3. So anybody who earns 1.3 million per annum has no payee to pay. So if you divide that 1.3 by 12, you're talking about someone who earns 100 and something thousand. He's tax free. Means payee, he won't pay payee. Then again, they also increase the threshold that the first 800, first 2.5, first. So the threshold was expanded as against what we have before. Before now, it's first 300, next 300, next 1.6. You understand? So, and you know, Nigeria operate what we call the progressive tax regime. That as your tax band increases or your income increases, the percentage increases. Right? So you need 7, 11, 15, 18, the highest is 25. 24 rather, as at that. Now the highest is 25. Now, so these are some of the rearrangement that we have to focus on, and we have to domesticate it. We have to, so that our present taxpayers don't pay on the old rate, but rather pay on the new rate. And so these are some of the things we need to domesticate. Then again, there's also another path of the regulation that the Honorable Minister of Finance have sent in for all the states to domesticate them. And that have captured a lot of revenue from that of the local government. And the idea is that they want to collapse, because there are some taxes that we cannot collect them now. I'll give you instance, slaughter slap. Who goes to slaughter slap and slaughter animal? We just go at the back of our door, we just cut the animal and...
but they have those that in the market that do slaughter, so doesn't it apply to them?
Do you know how much is the rate for a slaughter slap? 20 naira, 30 naira. Is that realistic? You understand? So these noisy tax are off, bicycle tax. In the country, in a civilized country, they are encouraging citizens to drive bicycle. A country like Netherlands, even the prime minister have bicycle. In fact, one of the most luxurious things for you to have is bicycle, to encourage well-being. You understand? Then Nigeria still have bicycle tax, wheelbarrow tax. You understand? Radio tax, tax, tax. All these are noisy tax, cattle tax. When we're encouraging people to even grow more cattle, so why will you tell them to have cattle tax? You could see even globally now there's a high cost of beef because there are no cows from. So you could see, and the idea, and in the tax law is that it tries to encourage agriculture, and it says clearly in the tax law that if you are into agricultural business for the next 5 years, you're exempted. So they give you what we call pioneer status. A pioneer status means that you pay no taxes because you are into this field,
regardless of
how much you make out of it. So it means Nigerians have the opportunity. If you don't want us from the tax administration to disturb you, just go into farming.
So young people, you heard it right here on Tax Gauge. I seen it again.
Yeah.
Go into agriculture.
Farming. Yeah.
Is it just agriculture?
Both. You know, the problem is if you say agriculture, the assumption is only green farming. Okay. Agriculture does not stop at green farming.
Poultry.
Even you are doing poultry, that's animal husbandry, or you are doing crop farming, all of them are completely exempted. Or they are giving, even fish farming, piggery, everything. So the idea is we are trying to encourage massive production of food. And we're talking about food security globally. So we need to produce, and the laws exempt us from this kind of activity.
So in terms of domestication, are you saying right now that the Plateau State has consolidated?
Completely, we have domesticated.
And all these things are applicable in the state?
They are 100% applicable.
In the state?
In the state.
Great.
They are happy. In fact, the people are happier because now we have introduced them to a new Pandora's box that you have lesser taxes. And the truth is, we had a shock.
Okay.
That the shock happened because when, let's say, for instance, we are collecting payee of, let's say, 700 million. Now there's a shock. We are collecting about 500 and something million. And this is because a lot of thresholds have been lifted up, so a lot of people have been dropped from the tax net. Not necessarily because we don't want to collect their taxes, but because they are not within the limit of taxable individual. So they cannot pay the payee because they are below the threshold. It means you are taxing poverty if you have to go and collect those ones for them. So they are exempted, and that's what the Nigerian system does.
Interesting.
Yeah.
So that means young people in Plateau State are safe. It's not just at the national level or only, and in Plateau State, young people in Plateau State are safe.
In Nigeria, completely.
No, I'm speaking because you're the one saying
jurisdiction.
This right now. You're the one saying this right now, and so many people don't know this because we're under the assumption that because the new tax law has been released, everyone knows about it. But the truth is, they don't. So I'm happy that you've come on Tax Gauge and you're making this clear and letting people know that for Plateau State, where you come from, you can categorically say for a fact that the new tax law has been consolidated in a way that favors Nigerians according to the new tax law.
That's right.
According to the new, and that's what people should really know about. But I also want to ask, right? So for people who are residing in Plateau State now, considering the fact that the law has been consolidated and there's a consolidated law released for Plateau State, should people bother reading the consolidated law, or should they bother reading the NTA and NTA?
So the first thing I will tell you that the law is the same.
Okay.
Because we only domesticated what was legislated at the center.
So there was no difference at all?
You can't divert from the difference. You can't create your own law. You understand?
No, I understand, but sometimes I think the states have leeways to make certain changes to that.
Like what? That kind of changes. Now, you see, that's why I said earlier that taxation is on the exclusive list. Okay. And if it's exclusive, when something is exclusive, it's not for everybody.
Okay.
You understand? So the laws are made from the center.
Okay.
So all you could do is to align with the center, and that's the domestication. You align with what happens in the federal. And once you aligned, it means that, in fact, let me tell you, even if you go to court of law, and there's a contradiction between your law and that of the center prevails.
Okay, true. Yeah, that's...
You understand? So, and we have a lot of individuals that challenge even some of the domestications you made. They tell us, no, we've seen in this law that they fine. Let me give you an instance. Let's say the fine for late return is 100,000 for the first month. You cannot make your own 150.
No, that is crystal.
Do you understand?
Crystal.
So that's the domestication. So you must domesticate it in his words and in his spirit.
In words and
that
spirit.
You cannot alter it completely.
Okay, well, I was referring to gray areas.
Now, for gray areas, yes, you see, there are also loopholes, and we take advantage of the loopholes sometimes.
Exactly.
So let me give you an instance. Like in Jaws, we had a bit of uprising sometimes around April. And we know the deadline for submitting annual individual returns is 31st. The law sacrosanct is 31st.
March.
But we have rights as a subnational to increase the period.
Okay.
Just because we want our citizens not to be caught up with the offenses.
Okay.
But this is because we want to help our citizens. Though the center say that it's this amount.
It's this time.
Yes, it's this amount or this period, but you can now expand the period. In that regards, yes, you can have those kind of leeway and give those instances. And again, even if the law says you can do back duty for 5 years, you can decide to say that, I can't take the stress. I'll just do 3 years.
Oh, okay.
You got it?
Okay,
But
so
then,
yes.
like I said, you can't even write it in your laws. The federal says 5 years, you say 3 years. You have to align with the center.
Okay, so on paper, it has to be exactly.
It's what and
It's
in spirit.
exactly what in the spirit.
You remember I told you that the NTAA, the Nigerian Tax Administrative Act, also shows that we must do things the same. Whether you are in Lagos, you are in Abuja, it's the same way. In fact, even the formation of our department, our functions are the same now.
And you can say for a fact that the Plateau State Internal Revenue Service has adopted this, and all the necessary departments.
We've done that long time ago, and we've keyed into what is happening at the center, and we're going. And luckily or fortunately for us, some of the new innovations that they brought in the new tax law. Let me give you an instance. The new tax law start taxing digital economy.
Exactly.
So we could now literally see earnings even in dollars, which we've never seen before. We see earnings.
People are paying in dollars?
Yes.
I thought the law doesn't allow that.
It does. No, there's no law. You see, the problem is that there's no law that says that you must pay if somebody works and earns in dollar. If for instance, let me take one, Meta, which is Facebook.
Okay.
Right? Facebook have somebody who monetizes his account and he wants to make the payment. Facebook is somewhere in America, don't know our denominations. But because you force the person to provide his NIN, and the Facebook identified that his tax jurisdiction is Plateau, and he individually make the money, he sent the money to Plateau. And he sent it in dollar account. So it's there for you to exchange it in dollar exchange and have it in Naira.
But can an individual come and file in foreign currency?
If he does business in foreign currency and he feels you want to file, we have a dollar account, so we give you a dollar account, you make the payment.
No, I'm not referring to the payment. I mean filing. Like
he can file in dollar. Yes, he can file. If that is the language he understands, we allow you to file in any currency of your choice. Remember, in the FRS, in the Nigerian Revenue Service, they have 3 dominant currencies that they file in.
Okay.
They file in pounds, they file in dollar, they file in yen. So whichever currency, if I use euro, so they find it in the currency that is convenient to whichever.
To you.
Because they do international business. But remember today that even work is not based on jurisdiction. Work space does not have jurisdiction problem. Like you can be here in Abuja, but yet you are working for one tech company.
Sure.
If they are submitting their return, where will you go to?
Sure.
To come to Abuja.
Okay, so you can file in any currency.
Yes, you can file in any
currency that you receive your
payment. In fact, very soon we'll start collecting cryptocurrency, not only Naira.
Oh, this is very beautiful. It's happening right here on Tax Gauge. I remain your host, Halil Rain, and you're headed right here. Well, no matter the currency you earn in, you pay your tax in that currency. It's possible. Plateau State is doing it. Nigeria is doing it. You too can do it. We'll go on a short break, and when we come back, we'll talk more about double taxation. We'll be right back. So we've been having a very interesting conversation, and now we're going to jump into double taxation. So, Doctor, when we talk about double taxation, before the new tax laws and now with the new tax law, starting obviously before the new tax law, what was this whole concept of double taxation? And with this new tax law, does it still exist or has it been extinguished?
Okay, so double, I don't think it's even double. We call it multiple taxation.
Okay.
Because if double is 2, multiple is many.
Yeah.
So across jurisdiction, we have that issue of multiple taxation. So let me give you an instance. We have the Federal Revenue Service in one hand, which is now the Nigerian Revenue Service. We have the state IRS. Then we also have the local government.
Okay.
And each of these 3 tiers of government have different kind of tax component they collected. That sometimes you discover that the state is collecting its own revenue. The local government come and collect the same revenue.
Yeah.
Yes, and then sometimes a very clear example is what I gave earlier. That the Federal Inland Revenue then was collecting VAT, value added tax. Lagos collecting both consumption tax. Now, value added tax and consumption tax are literally like the same thing because all of them derived from consumption. That's another form of double taxation. So what the new tax law did to us is that it clearly separate what jurisdiction this kind of taxes are at, then what kind of taxes you're supposed to collect, and also stipulate clearly, because there are issues that even between us, Internal Revenue Services across the state, we have issue of which one is the original tax payer's resident, because individual tax payment is based on residence.
Exactly.
So I give you instance, you have an intern worker. An intern worker is somebody who does not reside in one place for a long time.
Yeah.
Maybe he resides in Jos for 6 months, he moved to Abuja for another 3 months, he moved to. Then the question is that where would he pay or remit his taxes? So the law also made it clearly that this time around, anybody that spent up to 180 days in a particular location, then that is now his tax jurisdiction, or that is now his state. If you've been watching TV very well, there's a case of Shakira and the Spanish country. That Shakira was saying that she was billed to be stayed in Spain.
Okay.
But she said that she have not stayed the reasonable period of time in Spain, but they taxed her and said that her jurisdiction is Spain. Because she was married to Gerard Piqué and is a footballer, he have moved to Camp Nou and things like that. So it is still, till today, is one of the most celebrated cases in terms of tax jurisdiction. So even within us, from Taiwan Tax Authority, you see that Plateau will collect, Bauchi will go and collect. So that is a clear case of double taxation. And there's also a case of multiple taxation. Let me give you an instance. You have a truck that picks goods, or let's say farm produce from Jos and is going to Lagos. Now this truck is supposed to pay what we call haulage fee then. And haulage fee only says that from the point of loading and the point of loading, that's why you pay. So if they charge you at Jos, where you are going to Lagos, they will split the money, for instance. But now, any state he passes through, you see this non-state also stop him and collect money. You see, so this is a clear case of multiple taxation. Until today, these things is still on the road. The new tax law have killed these road taxes, but the people that benefit or use or work under it are still on the roads. And if you remember, just recently, the Commissioner of Police said they are going to, the IG of Police said they are going to unbundle and dismantle all checkpoints. Because these are where they use to perpetrate those kind of instances. So, and you remember, if truck leaves Jos, he must pass more than 3 to 4 or 5 states before he gets to Lagos.
Exactly.
Depending on the location you follow. Imagine each state is collecting 25,000 per that truck. At Jos, he collect, he come to Nasarawa, he collect, he come to Abuja, Kogi, he collects, go to Lokoja, go to Lorry, so it keeps collecting. This is a clear case of multiple taxation. But as it were now, the new tax law had made it easy. In fact, this time around, they are using devices that at the point of loading, if they charge you, they will split the money at the point of loading. So even if you arrive at Lagos, nobody will collect haulage fee again. It will be split. And these are some of the things that the new tax law have done. So multiple taxation is going into its minimal. I think, in fact, as far as I'm concerned, the tax law have killed it. Particularly, let me give you instance, the one that we're having even at the state. Now, in the state, we have what we call ground rent, we have what we call property tax, we have, that's at the state level. Then at the local government, they have what they call tenement rate. Okay. Now, the question there is that all of them has to do with the building. So why is it that so many other actors, both the states and the local government, going after that? And if that taxpayer pays the local government and pays the state, this is a clear case of double taxation. So now there's a regulations that try to, it's called under land use charge, and other land use charge under property tax, that if state collects the property tax on behalf of the local government, there's a sharing formula that goes to the local government as their tenement rate, instead of collecting this multiple taxation. So these are some of the things the new tax law have come to kill multiple taxation. But let me also be frank to say that most of the taxation that people are paying, we're actually not double taxation, you're actually paying to non-state actors. Could you give us let me explain. Now, if I say you're paying to non-state actors, you're paying to people that have taken the form of government, as if they are government, as if you are paying to government. They are not. So let me give instance. Aguero, yes. Now let me give instance. If you go to somewhere around Apo, you see keke. Then you see one guy with a peep collecting money from those keke. The small understanding you have is that it's government, you are paying levy to government. Yeah, come on, you are paying to a non-state actor. This we are collecting, devolving the citizens, and it's assumed it's taxes. If you ask any keke rider today, he tell you that he pay tax every day because of that levy. Probably it's only for their union or their association. And the FCT administration does not know anything about where and what that money is going to. So these are some of the clear cases of this. Remember also the issue of pack and pay. There are so many issues of multiple taxation to non-state actors. Even this one that I talked about, that the road taxes that they pay on haulage and haulage fee, all these ones are mounted by non-state actors. And the reason is that most of the state actors cannot be in the road in the night.
Yeah.
Imagine you're working hours 8 to 5. Will you now go and resume another work 10 to 6 a.m.? You wouldn't. So you see, so the non-state have to take advantage of that. And they collect the money. And the trucks prefer to drive in the night because there's less traffic. So you see, in fact, let me even give you an instance. I have a registered number of vehicles in the state. But as of today, I was telling them that how comes we have about over 1.5 million registered vehicles. We've not collected, half year into the year, we've not collected up to 100,000 vehicles registration. It means there's a problem. Now, we realize that some of the gimmicks is that the people don't come out, or if they come out before 6, because the authorities resume work by 8, are closed by 5. So they go out and enjoy themselves. By 6 p.m., they drive back to the house. So who sees them? You know, so you see, for the work of taxation, is like a monkey trick. You must learn the trick of a monkey, how to jump from one tree to the other. So every day we keep learning on their tricks. So what we're doing in just now is that we're going to mount a joint patrol with both the police, the civil defense, the road safety, the vehicle inspection officer, and our staff.
Okay.
Yes, and so if that happens, that joint operation would limit or reduce those people that are running from paying what they are supposed to pay, as it were. And again, so you see, there's a lot of collaborations that you need to do. So we need to have a flagship system whereby the system is smarter and see that this person have not registered, it flags it up and will follow up with it. But you see, so every day we learn, then every day we keep building the system in order the system to assist us in doing our work. Then sometimes I tell them that we must also learn to reach out to the taxpayer. Your papers have expired. It doesn't take 10 minutes call. 10 seconds call. Your paper has expired. We're expecting to come and renew. You understand? I have a system that sends a text message 1 week before the expiration. And you know the good things about like your driver's license, it expires on your birthday. How I wish the vehicle particulars should be expiring on somebody's birthday, so that you know if there's any day you will never forget, it's the day you are born. Yes. So and their driver's license usually expired on your birthday. I think the person that created for the road safety is a forward-thinking person that looks at it. And so these are some of the things that innovation that we need to bring into the tax net, that will look at significant dates where those things cannot change, where those things are very precious to you. Then we'll tell you that. That's why today, if a road safety catch you say, but you know that driver license expire on your birthday. You should have renewed before the next birthday and things like that. So these are some of the things that we need to key in. As simple as it is, it makes a lot of difference.
So, Doctor, you've actually peeped into the next question and the next question, but just in clear terms, what exactly in your office are you doing? You know, you're the executive chairman, Plateau State Internal Revenue Service, and from what you're saying and from what we have seen, you are doing a lot in domestication of the new tax law and in making sure that the new tax law takes full effect in Plateau State. So in clear terms, what are you doing to ensure that people do not fall victim to these non-state actors that you made mention of? Because the truth is, you're very correct. Most of the issues of double taxation, multiple taxation are caused by non-state actors. So what exactly are you doing as the executive chairman? Collaborations with the force, people in the force. What are you doing exactly to ensure that non-state actors are thrown off the streets, off this whole ecosystem?
All right, so the first thing I will say is this. Once you fight corruption, corruption will fight back.
Okay.
So I've been fighting them for the past 3 years, about 3 years now. They have also been fighting back. Yes, they will fight back. You know, one of the things we had done in Plateau State is that we blocked leakages.
Okay.
And one of the leakages that we blocked, we disallowed non-state actors to take the form of government.
Exactly.
And again, we removed issue of consultancies, that every little thing, there's a consultant doing it. And the consultant mounts people that are not government officials, and they are collecting it. They make the work of a taxation become a toggery and a touty. So, and one of the things we did is to block that. We stopped that. And again, we also do with the law enforcement agency. We are partner in progress. All of us are state actors. All of us has a stake in the state. And so we partner with them to fight these people. But let me tell you, they would never relent, because some of them feel they're too big. Some of them feel that they have one politician or they have one emir or we have one
back
chief
them.
somewhere that they feel they can destroy a system. And I tell them one thing is that you can never fight a state. They say there are 3 G's you can never fight. You cannot fight God, you cannot fight government, you cannot fight Greece.
Interesting.
These 3 G's you cannot fight them.
Okay.
So I always tell them that.
Interesting. So, Doctor, as we draw the curtain right here, because we have to wrap this session up. It has been a very interesting session, but we have to draw the curtain. So, what would you tell a young person who has listened to your very interesting conversation to do now to become tax compliant? And I know it has to do with your technology-based system. Could you throw more light on that so they know what they need to do now to be tax compliant?
So first, to be tax compliant, you must first register. So once you're registered, you can just go to our website, www.plateaustate.ps.rs.gov.ng, or you can just go, check us on www.plateauigr.com. Any of these two will link you to a place where you can register by yourself. Self-registration. You issue your tax certification number, validate with your NIN, and also with your phone number and valid email address to send to you. That is the first point. Then again, always go to our website to ask questions. There's a smart chat there that can chat and tell you everything that you need to know. Then again, for you to take benefit of what we're doing, even for the orientation, is that come to us or reach out to us through any of our platform. We are going to listen to you, guide you on what you should do. And let me tell you, the tax authority does not steal money from you. They help you direct even your business in the path of growth and recovery in case if you are falling. Then again, the tax authority will also guide you in other viable businesses that you should do. Because we're interested in your progress, because once you progress, then the state progresses. Once you make money, then the state also make money. And that's the whole idea about what we're doing. And technology has been helping us to do that. You can do it at the comfort of your home. We have a chat box on our WhatsApp, very intelligent. Ask any question, it leads you. Can even generate your team from that WhatsApp platform. Maybe I'll share the number, then you can share it at the screen after this. So these are some of the things we're doing. But by and large, I would tell young entrepreneur, young business people coming up, come and register for tax. It helps you. It makes and gives your business credibility. It gives your business visibility. It's also not only that, it shows that you are a responsible citizen. Somebody somewhere can now handle a bit of responsibility to you because you are responsible in one area. And that's the truth. And globally, business looked at what are your tax compliance indices are. If you are tax compliant, you know that this is a responsible business. If you are not, I know that this is not an irresponsible business. So I would advise you that come and do business with us. Come and register your taxes with us and your businesses with us. Then we guide you as well as what to do. And you will never regret it. And your business will grow from that table business to a multinational business. Thank you, and God bless you.
Thank you so much, Dr. Jim Pamwayas. It was a pleasure having you on Tax.
Thank you.
So much, sir.
Thank you.
Thank you so much.
So to our viewers out there, the laws are changing fast and ignorance is not an excuse. Know your thresholds, understand presumptive tax, and demand accountability for the taxes you pay in your state. Join the conversation online using the hashtag TaxGauge and follow all our social media handles as displayed on your screen. Keep up with the conversation. Be abreast with what is happening in the whole tax ecosystem. For us and TaxGauge, we draw the curtain right here. And I remain your host, Hala Rain. Keep your gauge accurate. Bye for now.